Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Thursday, November 17th, 4:27 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market continued to be in a bear market rally that was definitely tested today, but held. We had some good and some bad on the day. Both bulls and bears probably walked away disappointed. Check the trend gauge over here. Still doing fine on market leaders. Short term and medium term, this is a reference of where are the five major indexes versus their short term 21-day moving average and their medium term 50-day moving average. All five are above those key levels. 200-day moving average continues to be a challenge. Small caps broke further below it today. Mid caps bounced at the 200. Dow still firmly above. NASDAQ just has to wave to it in the distance, while S&P is trying desperately to get up to it. The fact that the slope of the line continues lower makes it an easier hurdle each day, but not if you end up red on the day, obviously. So what happened today? Split decision, S&P 500 with an ugly gap overnight, and then moved down even further before the open as Bullard, Fed hawk Bullard, came out just talking a bunch of nonsense. And the markets went lower, gap down 1.5%, sorry, 1.2% on the S&P, 1.5% on the NASDAQ and small caps. But while that was bad news because it meant the 3950 level broke, we opened right above the 3900 level, and that held like a rock. So obviously, less volume in the futures before the market opens up. That got us down to 3,900, but no further selling. That was about the low of the day. And then we tried to challenge 3,950 back on the upside, got above it for about 30, 45 minutes, and it failed. So as of right now, 3,950 has flipped from the support that it acted as for the prior 4 days to 1 day of resistance today. Here are the numbers overall. G6, this is our 6 growth ETF composite, down 0.9%. S&P down 0.3%. NASDAQ 100 down 0.2%. Dow just barely finished negative. Mid caps down 0.54%. Russell 2000 small caps down 0.76%. Global diversified 60/40 stock and bond down 0.27%. In-house GROTECTION up 0.22% on the day. Our individual stock holdings did the job today, finishing firmly in the green. So let's move forward to our daily public service announcement. But first, and then we'll go into the tail of the tape and the charts. Take one last look here at the trend gauge. This is at the heart of our guidance for how much we should or should not be in the market. And here's a chart of the S&P 500 that we use to translate and the other four indexes, but mostly the S&P and the NASDAQ 100. How they're performing goes into the 3 time frames, and then of course we are always looking at market leaders. So what is Revere Asset Management, and how are we different from typical registered investment advisors? Well, typically they're pie chart guys. They stick you in a certain percentage of large cap, mid cap, small cap, international, emerging markets, and bonds, and tell you to think long term. We don't do that. We use our technical skills to determine the health or lack thereof of the market. We're a fee-based, only fully transparent, conflict-free, SEC-registered investment advisor. Our flagship portfolio is called GROTECTION, designed to grow assets during market uptrends, protect them during downtrends. So here's an uptrend. Last October, the moving averages stacked short term above medium term and above long term. That's perfect. Price on the 5 indexes trending above it. We are as long in the market as we can comfortably be at this point. If we start to turn sideways, some of our stops will get hit. If we start to really turn lower, the slopes of the lines will go over, and we will reduce exposure even more. And if we break below this black line, That's a big flashing red flag to us. We've done a lot of study in this. All of these bear markets going back to 1970 occur below the 200-day moving average. Typically, the average decline from a high to a break of the 200 is 12%. Anything over 12% here is what you're at risk of losing to the downside once you get below the 200-day moving average. And we think we've got a risk management process that can not only keep you out of the way of these drawdowns, but get you back in using different technical signals. And if you're interested in this approach, give us a shout. We think it's a common sense approach. Reach out to me, Don, at revereasset.com, or phone 855-REAL-WEALTH. That's 855-732-5932. So here's your S&P 500. What did we do today? Let's go to a 30-minute chart here. You can see very clearly that what I talked about in last night's video, this 39.50 level was support for 4 days after the CPI gap up. Couldn't break below it. Broke below it overnight, and then further down on Bullard. He actually brought up that he could see the terminal rate being 7%, and 5% was what we should see as a minimum. And that's the first time anybody in the Fed has mentioned 7%, and that really smacked the futures. But right where we opened, that was it. Couldn't go any lower, couldn't break it down lower. And note this 3,900 support. Well, it was resistance over here back in late October. Now flipping to support on this pullback. Good stuff there. But then you can see midday, the rally, we tried to get back above this 39.50 area, and that failed also. Did have a decent close, just shy of 39.50. Bulls want to very clearly see us get back above this 39.50 level. Let's look at the NASDAQ 100. Very similar, except for substitute 285 for 39.50. Gap below, and then substitute 280 for 3,900. Gap below, got back above it intraday, couldn't stay above it, fell down. Decent move into the close. Bulls want to see us get back above 285 on the NASDAQ 100. Break down below 280 would be a win for the bears. Back to the daily chart and back to the Dow Jones Industrial Average, which has just been going tight sideways for 6 days now, in a range, in the same range pretty much as the gap up day, which is typical. You can see the lack of relative strength, except for the last couple of days when we started to pull back, and the Dow reasserting its relative strength, bouncing at the 8 EMA. Let's go to mid caps, MDY. I said we pulled back. We're trying to break the 200-day moving average intraday, but it held right there at this key 450 area. Let's go back to the S&P very quickly. You can see the 8 EMA is playing a role there also. We undercut, closed right back above it. Do notice, though, that we rolled over on the stochastic, and that applies to all 5 of the major indexes. 1 day of a rollover doesn't mean anything. Sometimes you go right back up the next day, but it is something to be mindful of. Same thing on the Dow. I believe it was intraday anyway. Yeah, very slight rollover there. And finally, let's go to small caps, which we had a 10% position in UWM, sold half of it today on the break, on the lower low below the yesterday's close, still holding on to the other half as we bounced at the 21-day exponential moving average. So there's your small caps. Can't muster more than 1 day above the 200-day moving average, but we did hold at this 180 level, which is the 21-day moving average. A couple of other key charts. Let's look at the equal weighted S&P 500, down over 1% today. So worse than the overall indexes, and clear break below the 200-day moving average now. QQEW, equal weighted NASDAQ, down 1.21%, so also worse today than the market cap weighted version, but did bounce at the 8 EMA. How did the dollar do today? Well, stocks down. You might think that the dollar would be up, and you would be correct. Closed near the lows of the day and is still in this 5-day trading range base, so to speak. So a bounce up higher, and we are extended from these moving averages. We're as extended to the downside in the dollar as the moving averages are extended to the upside on the S&P 500, and we're very oversold here. So that's another reason to be concerned about further progress on the indexes. It may be that we have to just chop sideways for a while. How about the VIX? Markets were down. VIX was up early, reversed, closed near the lows of the day. Right above the 24 level, came into 25 and got rejected. This is actually, I'm showing something different here. I'm showing, okay, this is a delayed, apparently an hour delayed. Thanks, Market Smith. The VIX actually closed at 2393, down 0.75%. So red on the indexes and red on the VIX. Does the 30, yeah, here. Not showing on the main screen, but it's showing on the 30-minute chart here. You can see popped early in the day. That coincided with the gap down in the indexes, but this dripped lower throughout the day. And in fact, when we came off on the indexes at the resistance area of 39.50 and 285 for the Qs, this continued to just go sideways. So VIX not showing the fear that you might expect. How did GLD do today? Basically gapped down and stayed down, finishing down 0.77%. How about Bitcoin? As Sam Bankman-Fried, or as I call him, Scam Bankman-Fraud, continues to try to dig himself out of, you don't know what you can trust coming out of this guy's mouth anymore. He admitted basically that a lot of the stuff that he said was lies to make him look good, but up 1% on Bitcoin today. Let's go over to bonds now, TLT. Inside day today on the 50, sitting on the 50-day moving average. Bonds down means interest rates up. Let's go to TYX, the 30-year. Bounce, did close near the low of the day, so basically sitting right on the 50-day moving average. Let's go to the 10-year, the TNX, and up on the day, but below the 50 and below the 21-day moving average. How about junk bonds? We said we wanted to reference these to see if there's any fear in the market. They were down also today, but again, still trading in this tight range. No real signals given by that action. Did that cover all of the other indexes? Yes, I believe it did. So let's go to some individual stocks now. And before we do, we'll go through the tail of the tape. From the technical standpoint, the stochastic indexes, this arrow flipped from up to down. G6 has been down. NASI RSI is still positive, and these moves below the 21 and the 50 on bonds and the move below the 21 on the dollar still intact. Put call, I didn't get the name for the total for the put call. Let's take a look at quickly the magic of the pause button here. So put call below 1, 0.97. That's really neutral. We want to get things started correctly as we use this template for the next day. VIX positive below 24. As I said, fear and greed ticked down to a 63. Pre-market bullard, as I said, extremely hawkish, sees rates 5 to 7%. The election bureaus and news outlets finally decided that Republicans did in fact win control of the House. Day count, we've gone from up 2 and then consolidate 3 to down 1. Expectations, as long as we're above 3,900, are positive. 3,900 did hold, but 3,950 failed and flipped to resistance. That's really the key thing that we'll be watching for on Friday. As you can see on the levels, gap down below the support resistance level, but support held. Same thing on the NASDAQ 100. We traded between support and the support resistance fib level at 286.82. Excuse me, I am still fighting a cold. Here's 3904 overnight low, and that held. 3906 was the low of the opening 30 and 60-minute range, and that held too. Don't frequently see that, but it did happen. Dollar strong, semiconductors up, just even though NVIDIA ended up down for the day, up after hours, broke lower pre-market along with the rest of the market, tried to recover, finished down. If you'd have told me that NVIDIA would be red and the stocks would be green today, I'd have told you there's no way that could happen. But I should never say no way in the market because pretty much anything can happen. TAN or solar strong, ITA aerospace defense strong, bonds weak, which means rates up a little bit, XME weak, software weak, home builders weak, banks weak. Here's our focus list. We'll take a look at those charts here in a minute. What do we do in-house? I mentioned we trimmed that half size of UWM on the lower low below the 200-day moving average, and we sold Lockheed Martin. Why'd you sell Lockheed Martin? That looks very strong. Well, let's talk about, first of all, about why we got into Lockheed Martin. So very strong reaction on its earnings report. This really would have been the place to buy it above 450. It went up to the top of the range, consolidated a little bit, couldn't go higher. Last Friday, when all of the defensive growth stocks were sold, this one got hit hard, down 5.5%, followed lower the next day. Then on the 15th, that was the cruise missile hits Poland day. That's when we bought it. You can see the volume there on that day. No follow-up to that. That ended up being basically nothing. It pulled back the next day and it bounced nicely today, but again, not much volume there. This I just don't see as a leader. So between the way we manage things with half of the portfolio in the index longs and the other half reserved for true leaders, I just don't consider this as one of them. It had its nice run here. It's pulling back. Could make a liar out of me. I don't know. But I want to buy something that's going to do twice of what the S&P is going to do. And while it did here, you can see how choppy the relative strength on it can be. So it goes through these periods where it really breaks out and goes up. But this was tied to Ukraine and Russia. This was after earnings, but after those initial bursts, they tend to really go nowhere for a while. So made the decision to shrink the portfolio a little bit, and the fact that the overall indexes weren't doing that well at the time made the decision a little bit easier. We're still holding our other positions, which had pretty good days. Let's start with Mobileye. This is a volatile one, ended up positive on the day. You can see right now 2 days in a row between this 28 and 30 area. PI, good day, positive, bounced perfectly at the 21 the way you would want it to. Steel Dynamics was very red early, bounced and finished back above that 100 level, outside positive reversal there on above average volume. So that pullback day, look how light that volume was. Very favorable volume patterns for Steel Dynamics. And First Solar, stand out for the day, up over 4%, pulled back, bounced off the 8 EMA, made a higher high. GFS, also a good day. We added to this yesterday and were rewarded today. This gap down at the open and had an outside positive reversal. Again, excellent volume patterns there for GFS, up 3.74% on the day. So let's finish up the tail of the tape. Bottom line, as I said, split decision. That 7% scared the market, gap down below 39.50 support, but 3900 held. So again, split decision. You can see the support and resistance levels there. And now let's bring up our focus list and go through the chart. So GFS was the first one, obviously, since we added to it yesterday and it bounced right off the 8 EMA. Wanted to make sure that that held up today. It had a pretty good day. Would have appreciated more volume, but you can't always get what you want. SHLS, new one on the list. New solar stock with a great earnings report, made a higher high today, back above the high of the gap up day with volume. This initially gapped down during the day, and just let's take a look at a 5-minute chart. You can see the accumulation here. There's the gap down, and then in the afternoon, this was just buying. When the market pulled back from 39.50, it just went sideways and then finished with a flurry. So good stuff there on SHLS. Definitely added to the leaders list. Celsius continues to play around this 100 area, made a higher high today, closed right below the 100 area. So acting well after a volatile earnings day. AEHR, big gap down yesterday, further gap down today, but stopped at the 21. Would have been a great low risk entry point. And it rebounded to be up 4.6% on the day. ON, semiconductor, gap down in the day, but bounced right at the 21-day exponential moving average. We did see a lot of leading stocks gap down and then put in their lows in the first 15 minutes or so, and then just started to trudge back to the upside. So as far as individual stocks go, a pretty good day for them. Boeing, shake out below the ADMA with its gap down, volume tight, really drying up here. I've had my eye on this for a while. UTHR, following up from its earnings gap, continues to consolidate on lower volume. NVIDIA, this is one, it was on the list because of their earnings report. So really not that bad. NVIDIA really has a 3-month relative strength of 94. The 1-year relative strength is a 23, and that's kind of the reason why I don't pay attention to the year-long relative strength. I look at the 3-month primarily, but this has really been acting well. They were short on earnings, they beat on revenue, and they guided down, but really not a lot of damage to the stock. You can see on the 5-minute chart here, it gapped down, it ran, and then it just kind of dripped lower during the day. But on the other hand, the semiconductor index followed it at first, but then trudged higher to sideways for the rest of the day while NVIDIA was selling off. Basically pulled back and held the ADMA. Semiconductors set up for a leadership position here if the market rights itself. What's next, BJ's? This had been on the 2121 list. Not anymore. Actually, it got taken off a little while ago because of a lack of relative strength, but supposedly a decent earnings report. Same store sales pretty good, but if you look at their earnings, the slowest of the last 4 quarters here, it gapped down, closed near the high of the day, but below the 50-day moving average. And I wanted to see how Costco, its sister stock, would react relative to that. Costco down a little bit on the day, but bounced right at the 200-day moving average. They've got earnings in 3 weeks. Apple has been showing some relative strength lately, got back above the 21 and the 50-day moving average. You can see I've got alert set above today's high, below today's low. It breaks below today's low. That's a break of the 50 and the 21, and that doesn't bode well for the NASDAQ 100 as well as the overall market. And if I wanted to look at something on the short side, SARK, this is the inverse ARK ETF, trapped between its 50 and its 221 downtrending moving averages. Let's look at the underlying ARK-K. This is kind of tight to look at, but you can see it's trending lower. Let's look at it on a 60-minute chart. And ARK, here's the big move up, 24% 2-day move for ARK. This was just basically a bunch of short covering. Gapped down on day 3, gapped up on the PPI news, gapped lower each of the last 2 days, finished low. So now it is actually below the low of the close on day 1, which is the big CPI gap up. And that's basically what happens is you get a flurry of relative strength because of short covering. In this case, it took 2 days and it took the stock up 24%. Now you've dropped from 41 down to 37 over the last 3 days. And if the market's going to break down, SARK might be a way to make some money on the breakdown of ARKK. So that's going to wrap it. As always, like to hear from you, Don at RevereAsset.com, or my partner, Dan Stewart, Dan at RevereAsset.com, or call 855-REAL-WEALTH. That's 855-732-5932. So wrapping up Thursday, 11/17. Remember, it's not how much you make in the market, it's how much of it you can keep. This is Don Vandenbord, Just the Facts here at Revere. Thanks for listening and have a great day.